Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and on this special edition, we are going to be discussing all about the budget announcements that were made with respect to the real estate sector. Now, whether it is about the contentious announcement made in respect of indexation or the lowering of the taxes with respect to LTCG. Now, which are the segments of the population and the consumers and the real estate industry players are looking at these steps positively, while others which are actually looking at it negatively as well. We'll try to understand what are these announcements, how exactly is it going to be impacting you, because this was one of the most notable changes brought in by the budget, the elimination of the indexation benefit on the sale of non-financial assets that includes real estate, and it has now emerged as, like I said, contentious decisions of the Union Budget 2024-2025, and the announcement literally initially led to confusion among various sections of the population, prompting the government to also issue a string of clarifications, explanations, claiming that it will be beneficial for most cases. While on the other hand, like I said, LTCG or the long-term capital gains tax rate has been reduced for properties from 20% earlier to 12.5% now for properties that are purchased after April 2001. Now, we'll try to simplify the measures taken, help you understand the exact impact on owners, on investors as well. And there are two very special people who are joining me on the panel discussion to help all of you understand better as to what are the propositions by the government and in the union budget. Mr. G. Babu, who is the National President of NARECDO, he is joining us on this special discussion. And also joining in is Mr. Chintan Vasani. He is the partner of Wisebiz Developers. Warm welcome to both of you, and thank you so much for taking the time out for this special discussion. Let me start off this discussion with you, Mr. Babu, and help us understand. You would have actually in the last 4-5 days or since the time the budget announcements were made, you would have got into a lot of discussions around the indexation benefit that has been removed. Do tell us, what is the mood in the entire real estate industry right now with respect to the changes that have been announced in the budget first?
Yeah, good afternoon to everyone. See, basically 2001 to 2024, this 23 years, if the property values goes around 9.5 or 9.25%, that means both the cases, either removing of the old system or new system, the tax is same. In simple mathematics, 9.5% is the break even. People who are earning in the long term under 9.5%, yes, they will be having little more burden on the tax. People who are earning 9.5% and above, they are all getting benefited. Okay. For example, most of the South Indians and most of the people in general India, investments are in three portions. One is stock, another is land, and third one is in the gold. Of course, fourth is category is in the flats. So they invest in the flats and they get 3%, 4% rent, and also getting the appreciation. If in the land cases throughout India, from 2001 to today, the land price have gone up by more than 15% to 25% in every city. That means I have invested in the land in 2001 at 100 rupees. Today, with the 15% of increase or to 25% of increase, my tax burden is coming very, very low. So I am getting benefited. And another thing is, even government ready reckoner rates from 2001 to 2024 in Telangana state, it is increased by 20%. Forget about the profit and loss and all these things. The government ready reckoner land rates have gone up by 20% cumulatively from all these years. That means 200 rupees value of the land in the first period in 2001, today at 12,500 rupees in Telangana. That means it is almost like 20% increase in the cumulative. If I am selling the 200 rupees item today to 12,500 rupees as per the government rates, today my taxation is very, very low at 15% of 12.5% plus 15% plus 4%. 14.95% I have to pay, which is the cheapest way of earning the money. Hey, individual taxes, people are paying 39%, 38%. Corporates are paying 25% plus again dividend tax. And here, all those things are not there. There is simple calculation. Whatever the purchase cost minus the purchase cost and profit, you pay just 14.95%, including
Okay.
surcharges, and
Okay.
close the thing.
Okay. Understood. So,
But
Mr. Babu, help us understand this. There are two things that I've understood so far from what you have said. One, those earning above 9.5%, 9.5% is the cutoff, will largely benefit even with this indexation removal. Those earning below that might face some higher tax burden. First, I
yes.
want you to clarify how much of quantum will be impacted. How many people do you think, have you quantified that at all, that are under that 9.5% band, and how many are above 9.5% band, so that we can understand how big is the population that is largely affected. One is that. Second of all, you're actually saying that despite all these measures, real estate investment will still benefit a lot of people, because we are any which ways paying much lesser tax than any other forms of asset classes that you are incurring more taxes in. Is that right, sir?
Yes.
Okay.
Yes.
So, could you go on with that clarification first, sir? The 9.5% benchmark?
Yes. Thing is, basically, if somebody invested in the purchasing investment in the as a second apartment, third apartment as investment. In the apartment, the ready reckoner prices are the increase in the real profit. If you look at the Mumbai or Hyderabad or main cities, it will be between 6% to 9%. That means the growth of the increase of the price will be between 6 to 9%. Of course, they are getting 3 to 4% rental income also. So for those people, if it is they are getting only 6% depreciation, then they have to pay difference of that 6 and to 9. Whatever the difference is coming, that is the amount they have to pay tax. Then what is the percentage of the people you are asking me? According to me, South India, particularly on the area where I am staying, 80% of the people investment is always goes to the land and open plots. They don't invest on the apartment as investment. Apartment is always a need. If I am staying in the apartment with my family, okay, enough. And the second investment will goes to only either in the stock or in the open plot or in the form of land. So if you look at that one, purchasing the second apartment as investment is much less people. Maybe I can say 20% to 80%. 20% people are investing in the constructed property, 80% are investing in the open plots and land. All that 80% people, the profits are much higher than the 9%. And
Okay.
today, an average of 15 to 18% growth is there in this sector, and
Okay.
everybody got benefited.
Okay, so you're largely saying that more than 80% people, they invest in lands and plots, and which is why they stand to benefit, because the rate of interest will be higher than 9.5%. Those investing in the second property beyond their own stay purposes and only for investment purposes is only just about 20% that are likely to get impacted. Let's get in Chintan also into the conversation. Chintan, you tell us, what is the thought process within your circle of people who have been discussing budget announcements thus far? Are you happy? Are you not happy with the kind of announcements that have been made, and if at all yes, then why?
So, Sakshi, I'm super happy with the budget, but indexation personally, I think it's a big. It has to be addressed, and it has to be taken back. Let me give an example with someone who has bought a house on 1st January 2009 with a budget of 50 lakh rupees, and he intends to sell it on 23rd July 2024. Now, with indexation at 20%, inflation adjusted value of that flat would come to 1 crore 32 lakh 48,175. The selling price, say it is 1 crore 50 lakhs. The capital gain will be attracted on 17 lakh 51,000, which would be approximately 3.5 lakh would be the capital gain tax which he would have to pay. Now come down to the no indexation at 12.5%. The whole scenario, the capital gain would be attracted on 1 crore rupees. It would be around 12.50 lakhs, and 8.99 lakhs, that is around 9 lakhs, would be the burden which he or she will have to bear. So I think it's really a very big amount that would create a lot of already people were on fence, and this would create more negativity around the entire thing. And just after this, there was a lot of uproar by people from all around India. Income Tax India tweeted that 12 to 16% is generally nominal real estate returns are generally around 12 to 16%. There was a tweet 4 days back, and the indexation for inflation is around 4 to 5%. So this will not affect. But if you ask me personally, if I think if someone can buy 12 to 16% per year in real estate, and the government of India can forthcomingly start offering 10% fixed returns, people would be more interested in that. I personally don't feel, Sakshi, 12 to 16% will be a normal thing, considering the entire India, considering all the flat owners, and especially those 3 4 years back, there was a cap of 10 crore uh, uh, flats, 10 crore, about 10 crore. Like, a lot of people made a lot of money in stock market. They ended up buying real estate.
Yeah.
Now just imagine the kind of tax that would be attracted. So this would create a lot of
Negative
uncertainty.
sentiment and okay, understood. Let's get in Mr. Babu here into the conversation. Mr. Babu, if you could make sense of the kind of examples that Mr. Vasani has shared. Again, would you say that the quantum of that 9 lakh rupees additional tax burden he's mentioning on a 50 lakh rupees property that was bought in 2009, and the additional tax burden that will incur now, is that not a huge amount for an average person out there?
Agreed. See, he has calculated the return of on the asset is only 7%. As I told, up to 9.5% is a break-even. People who are earning less than 9.5%, they are going to lose the money. So, sir has calculated at 7% as a growth of the property value. If the growth of the property value is 7%, definitely they are going to lose something. But if the growth of the property is, you are talking about I told you 20%, 25% people are investing in the apartments or in the living homes. But majority of the people are investing in the land and other assets. In the land and other assets, if you look at the thing, even if you go by the ready reckoner rates of all the states, you take all the states of including South, North and East and West, the ready reckoner rates itself is more than 10 to 12%. People, that means he cannot undersell the property value.
Okay.
One more thing I am telling, yes, right from the first announcement itself, 9.5% is the break-even I told. So the simple correction, this is simple mathematics. Under 9.5%, if anybody is earning, they are going to lose. If anybody is earning more than 9.5%, they are going to earn money. And one more thing, the future, because it is the lowest tax bracket, people will sell definitely for the full value of what they are really earning. That means there is no black money transactions in this place, because if somebody is still trying to take the black money, paying 50% tax is the biggest fool of the world. So that is the cheapest way of tax comparatively in any dimension. So yes, there are 20-25% people, or maybe less also, even 10-15% people, they are having the problem. I do agree, because their earnings are much lower. If you take like that, why do we calculate only these two? The apartments are this one. Why don't you calculate? A person invested 25 months fixed deposit in the bank. That is also should come under long-term capital gain. I have invested in the shares. You have invested in the apartment. I have some other person invested in the land. Three categories you are giving it 15% interest tax. And whereas if somebody invests in 25 months fixed deposit in the bank, what is the income tax he is paying? Full. If he comes in the bracket of 38%, he will have to pay 38%.
Right.
That is also long-term investment. If you are looking at the fixed deposit people who are the retired people, actually, most of the people are retired people. After retirement, they get the provident fund, etc., gratuities and all these things. They put in the bank for their income, monthly income.
Yes.
Now, if you look at the long-term investment, even that should be also 25%, 25 months if somebody invests. Tax should be 15% only. I recommend the Nirmala Sitharaman ma'am to keep that bracket also to 15%, because all the retirement people, they don't have other income. They cannot pay more money. If you are investing in the land, 15%. If you are investing in the stock, 15%. If you are investing in the apartment, 15%. If you are investing in the bank, it is 38%.
Got it. So basically, I wanted to also pick that point with you when you said that, probably less than 20% people will be impacted if they are earning less than 9.5%.
Yeah.
Are these the high-end investors of like high-end apartments, upscale apartments? Are those the losers, or is it the affordable segment? Because so far, what the narrative is being built is that probably this will impact all the high-end properties, where we actually have seen a surge in both sales of properties, prices over the last 1 year to 2 years or perspective. So is it only going to be a large burden on the high end investors of properties, or will it also impact those who have been investing in the affordable properties, sir?
Myself?
Yes, could you go on, and then I'll take
Yeah.
Chintan's view as well on
If
it.
if I look at the Bombay's last 10 years, 12 years, 14 years, apartment prices increase, it is almost like 15% increase there. 15 years back, if somebody is buying about 30 some 5,000 rupees per square meter, today is almost gone to 15% cumulative basis higher. Either in the outskirts of the Bombay or within the Bombay, if you look at the last 14 years prices, the increase of the price in the apartment is almost like 15% increase. That means the growth is at the 15% even for the apartments. Okay, older apartments, once you are staying for longer time, and then you are again giving for the redevelopment, and after redevelopment, if you sell, I am 100% sure that everybody gets 15% and more money for the long-term capital gains in 2025. Somebody sells for 1998 or 1990s apartments, no, they are giving for the redevelopment. After redevelopment, let them sell the price. It is they get 15% plus, 100% they will get 15% plus. Old apartment without any maintenance, and it looks like a sick apartment. There the appreciations are low. I agree. There is a lot of problem with that type of apartments. But if you well maintained and redevelopment for things, you will get definitely 15%. So once you are getting 15%, the new scheme is beneficial to you.
Okay.
And for affordable housing is just started about 7 years back. And any affordable housing today, again, coming to this same thing. Either the apartment is maintained well, the appreciation is there. If the apartment is not maintained well, then the appreciation is low. For example, we have Rajiv Swagruha. In Rajiv Swagruha, the maintenance is very, very poor. And the appreciations are only 5 to 6%. Because nobody wants to buy there because the water problem is there, the leakage problem is there, and the building look is bad. The only thing is that you have to maintain it properly, or you give it for redevelopment, either this way or that way. Then you will get 15% definite growth.
Let's get in Chintan into the conversation right here. Chintan, what's your own take, on the kind of impact that we are going to be seeing on this? Is it again going to be the high-end luxury properties which are going to be seeing the investors probably refrain from thinking about investing in real estate and high-end real estate properties right now, something that was on a boom until the announcements were made?
Sakshi, I personally feel, be it affordable housing, be it affordable luxury or luxury, everyone will be affected. As Sir Babu sir rightly said, anything where you have not made more than 8 to 9%, the taxation will be a loss for you, considering the no indexation, the current regime. Personally, I feel we were on a very good numbers. Like, the real estate is a multiplier. Like, whenever anyone buys a home, he pays stamp duty, he pays registration. There are so many avenues for the government to make money. And if real estate is doing good, there is a study, Sakshi, few days back. If 1 rupee is invested in real estate, it changes hands 7 to 8 times. So, as we are moving towards a $5 trillion economy, I think if this would have not happened, and we were just on the same, the fifth gear, the way real estate is going, personally, I feel it has to be rolled back by the government, and it will help the real estate industry and a common man who does not think real estate as an investment, but it is a home for their own. One second, there are Indians who stay in a home together. The entire family stays, and every 10 to 12 years, when the family grows, they are thinking to upgrade. They will be affected by this particular no indexation for them.
Okay, let's get back to Mr. Babu also to understand a little bit more in detail. How about those with the ancestral property? Because with this clarification coming in that indexation benefit will be removed for properties beyond 2001, those having the ancestral properties and may want to sell, are they still safe from the new announcements?
No, 2001 was taken, the decision was taken long time back, not this budget. The decision was taken long time back. So 2001 is the basic period for all the ancestral properties. Whatever the price of the government reckoner price is there, that is the base price. And from there only indexation has come. We are not going to calculate the backwards, okay, 1970 somebody purchased, 1970 to today, indexation is not, we are not doing that exercise at all. So the exercise starts only from 2001. So from 2001 to today, whatever, as I told right from the beginning, who earns more got benefit, who earns low, they will lose. And coming to the affordable housing, marketing point of view, affordable housing and the super luxury and super luxury, if you look at the last 15 years, 20 years economy, in 20 years of economy, we have increased multifold our asset values. And our property values are the country wealth has increased.
Yes.
What happened to the complete wealth? 32% of the wealth was taken away by 1% of the business people, number one. And remaining another 33% is taken away by top notch of 9% people of the country. That means 9 plus 1, 10% of the people have taken away 63% of the wealth. And remaining 97% got only 37% of the wealth. So naturally what happened, if I look at the salaries index also, the salary index in Mumbai is only at 6.5% increase.
Yeah.
The increase is only 6.5%. But in the real estate, the increase is 15%. That means the affordability is coming down. The affordability for purchasing the flat is coming down. See, these are different type of economics. What we are discussing today, indexation is good or bad. These are only two things we are investing.
Right.
Please, one more thing, when somebody want to upgrade their houses, okay, after 12 years they sold the property, and if they are reinvesting again into the property, then there is no question of any tax.
Yes, that's an important clarification that you're making. So basically, if somebody sells the property despite having the indexation removed and invests in any other asset class, be it property or any financial asset, then they do not have to pay, extra tax burden. Okay.
Zero tax. So that is taken care of by already. So people who are selling and holding the cash and investing in some other business model or maybe in doing something other businesses, for them only this is the problem.
Okay, got it. Just last word from you both I will take. One, Chintan, very quickly if you could help us understand. Of course, you are saying that of course there's a section of the real estate that believes that this indexation removal should be rolled back. And you do believe that there is a sentiment negative that is definitely flowing in that could deter people to invest in properties, especially high end. That's what you've mentioned. But I want to understand from you, will this also refrain real estate builders to hike prices or have that margin to continue hiking prices with the kind of move that we have been seeing? And second of all, the fear of black money returning to the real estate transactions. What is your take on those?
See, the person who sells, once he knows he's going to make loss by doing something, he would hike up his price for sure. Like, the cement prices, the steel prices, when they go up, you can automatically see the price of an apartment going up. So I personally feel, yes, the buyer would be the one who would who would have to adjust that particular extra amount that he will have to pay. So people, when they are selling, they will of course be adjust this particular entire amount, and the prices would go up because of this.
Right.
And because of the entire thing, now people will think whether they want to be invested into real estate or not. So if you ask me personally, Sakshi, if there is an option for someone to rather select with indexation at 20% or no indexation at 12.5%, there should be an option for someone to take the decision that would make more sense for the entire real estate industry.
Okay, got that. Actually, we are completely running out of time, but thank you so much, Mr. Babu, and thank you so much, Mr. Vasani, for being with us on this special edition, helping our viewers really get the sense of the announcements and how it is likely to impact. Both of you had different views, and that's what exactly we needed to share both perspectives with all our viewers at this point in time. We'll see how the government really moves forward from here on the real estate aspect. Thank you so much for speaking to us on Business Today.
Sir, thank you.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the Modinomics 3.0 special edition of Daily Calls presented to you by ICICI Direct.